Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, what a fabulous Friday it has turned out for the bulls, given the fact that the Nifty and the Sensex literally took off in the last half hour of trade. In fact, the Nifty comfortably managed to cross that 19,500 barrier, which it has been trying to do over the last few days, but was failing to do so. But, finally it did manage to break out of that level. In fact, hit a fresh record of 19,595 or thereabouts in today's session. But if you look at, some of the other sectors, IT index, of course, no points for guessing that IT was the the index that led the Nifty to the record levels. In fact, if you look at the mid and small cap indices, both these indices also rebounded from yesterday's weakness. In fact, gained over 1% or thereabouts in today's session. All the sectors ended in the green. I'll be talking about the IT sector in details in a bit. But metals, realty, these were some of the top sectoral movers. On the gaining side, on the Nifty, you had four out of five top gainers that were from the IT packs. So TCS up 5%, Tech Mahindra up 5%, Infosys, HCL Tech, Wipro, all of them firing on all cylinders in today's session. Hindalco, Tata Steel were some of the other counters that were among the gainers. On the losing front, few losers today: HDFC Life, M&M, Power Grid, Titan, Dr. Reddy's, Axis Bank, SBI. So banking as a pack, not all that wasn't all that upbeat, because it did come off its day's highs, but managed to end the day in the green nevertheless. On the mid-cap front, JBM Auto, that stock hit a fresh 52-week high. You had Z, that stock rallied over 9%. Aptus Value, Mastech, Emphasis. So mid-cap IT also participating in the rally. Nifty IT index, mind you, has hit a fresh 4-month high. And on the mid-cap losers front, you had Orient Electric, Mazgaon Dock. In fact, defense stocks coming under a fair bit of selling pressure after the kind of up move they have seen over the last few sessions. So data patterns, Bharat Dynamics, Mazgaon Dock, all of them on the losing front in today's session. Let's talk about the IT stocks, in details. Why was the IT pack rallying, despite the fact that heavyweights like HCL Tech, TCS and Wipro have handed in a muted set of numbers? That's because the numbers were muted as was being expected by the street, but they weren't as gloomy as some of the experts were fearing. So if you look at some of the stock action, HCL Tech snapped a 6-day losing streak. You had Infosys hitting a fresh 3-month high, LTI Mindtree hitting a fresh 52-week high. You had L&T Tech that hit a fresh 7-month high. In fact, the stock crossed that 4,000 mark in today's session. Looking at the kind of outlook that has come out of some of these companies, HCL Tech has guided for recovery. Mind you, it has maintained its FY24 guidance of 6 to 8%. Wipro's guidance was somewhere around -2% to +1%, vis-a-vis expectations of -3% to -1%. So, all in all, it was slightly better than what the street was estimating. And aside of that, TCS, remember, has had some healthy deal wins, and the deal wins have, in fact, come in above that $10 billion mark. So the demand environment is weakish, but it isn't as gloomy as was being feared, which is why we've seen a very strong rally coming in on some of these IT stocks. In fact, experts believe that FY25 could be the year when IT companies rather will stage a rebound when it comes to their earnings. And the data coming out of US suggests that inflation is cooling off, and which is why we saw the Nasdaq, of course, rallying somewhere around 1.5% in yesterday's session. So all in all, the global environment looks like it won't be a hard landing for the US economy, and the interest rate hike cycle could be nearing an end, which is why the global IT stocks were rallying, and on the back of that, Indian stocks as well saw some bit of a very good rather upsurge coming in today's session. Well, on that note, let's also take a look at some of the stocks that are on my radar this afternoon. Starting with JBM Auto, as I was mentioning, this stock has hit a fresh 52-week high on the back of an order win. Now, it has won an order to supply 5,000 electric buses to state transport undertakings. And this order, in fact, it could be a game changer for the company, given the fact that it could expand in newer markets, and it could expand its market share as well. And it would benefit the company because of the strong demand or growing demand in the electric mobility space. So it stands to benefit from that. And the management has, in fact, was on CNBC TV 18 this morning and said that this bus business will now account for 50% of the company's revenues this year. And in fact, fact, the company is also looking to cross 6,000 crore rupee mark of top line in FY24 itself. And the blended margin is seen anywhere between 12 to 13% for FY24. The electric buses will be delivered in the next 12 to 13 months. And if you look at the stock action, it has doubled in the last 2 months itself. The stock is a little expensive given the fact that the trailing PE ratio stands at 139x, which is a bit expensive, but return on equity last quarter was somewhere around 12% or thereabouts. So all in all, looks like this electric bus order will provide some bit of an uptick when it comes to the revenues, and which is why it looks like the prospects of this stock are pretty healthy going forward. The next stock on my list is DMart. Avenue Supermarts. Now, this stock didn't really participate in today's up move. The stock was down in trade, flat with a negative bias, so to say. The company will be reporting its first quarter earnings tomorrow. Profits are expected to grow 16% on a YY basis. EBITDA may rise somewhere around 14% or thereabouts. Margins are seen stable at 10%, double digits on a YY basis. And gross margins, according to analysts, could come in at 15.5%. This will be due to an improvement in the general merchandise sale. So, what the key things that the street will be watching out for DMart would be margin improvement and the change in product mix. Remember, last quarter margins weren't all that great. In fact, margins contracted by over 100 basis points, which is when the stock started coming under pressure, and it saw a fair bit of correction over the last 3 months. The stock did manage to, in fact, reclaim that 4,000 mark, but very briefly it was attempting a pullback, in fact comeback, but it failed to do so. So, whether or not the stock will see some bit of an uptick will depend on how the company performs in the quarter gone by and what the outlook would be going forward. So that's one stock that is on my radar. Well, I think with that we've come to the end of this edition of Closing Bell. If you have any comments, send them in to us in the comment section below, and we will take note of that. But of course, we are ending the week on a very strong note, given the fact that the Nifty and Sensex have hit a fresh record high. In fact, it's a fresh record close for the Nifty as well, and the IT index, of course, firing on all cylinders despite the fact that the numbers have been fairly muted. Of course, next week we will have some very big numbers coming in from the likes of Infosys, HUL, HDFC Bank, and a whole lot of other Nifty companies. We'll, of course, on Moneycontrol be getting you all the coverage, in fact live coverage on those numbers and analysis as well. But with that, I would like to wish all of you a very happy weekend. Have a great weekend, but come back on Monday morning as I bring you morning trade at 8:30 a.m. But for now, it's a goodbye from me. Thanks a lot for watching, but stay tuned to Moneycontrol for all your other financial news and updates.